If you've ever received a letter like this from the IRS, you may wonder what's going on, what's it about. The CP2000 letter is being sent because the information that you provided to the IRS in your filed tax return was different from the information they got from third parties. In 1099s and W-2s, they match everything up, and if the income reported to them is different from the income you reported in your return, they're going to send you a CP2000. This is coming from the automated underreporting unit. It's automatic. CP means computer generated. No human even looks at this. It's kind of the beginning of a computer audit. They're saying, we believe you made $400,000 and you only reported $300,000. So we're going to propose an additional assessment of tax on the extra $100,000, which would be $20,000 or $30,000 in tax. Now, don't get stressed out. This is fixable. We can take care of these. Meet F. Mitchell. He received a letter just like this. He came to me in December. He'd received a CP2000 because he'd not reported the sale of his house on his 2021 tax return. He thought he didn't have to if he invested in new property, but that's not the rules. So the IRS got a 1099-S, that's a 1099 sale of property, indicating he'd received $600,000 in the sale of property in the property sale transaction. He didn't report that on his income tax return, so they sent him a CP2000 proposing an additional assessment of tax of $216,000, which is tax on that $600,000. So he freaked out. He had no idea what to do. The IRS is proposing to assess him $216,000 in 30 days if he didn't respond. So he gave me a call and we got right to work. So what we did, we were able to communicate with the IRS. I communicated directly with the automated underreporting unit. They asked me to file a sale of home worksheet that should have been included in his return. So I prepared a sale of home worksheet, and then I had serious discussions with the automated underreporting unit about what the sale of home worksheet should look like and things that were included in it, because you get to take away your basis in the house, which is what you paid for it. So he got $600,000 in proceeds, but part of that was what he'd paid for the house. So that cuts into it right there. And then he had the home sale exclusion. You don't have to include this proceeds from selling your principal residence every 2 years. So between the home sale exclusion and the basis deduction, we determined that Mr. Mitchell owed exactly zero. He owed nothing, exonerated from all additional proposed taxes. So over the next few minutes, I'm going to discuss with you what to do when you receive a CP2000 letter from the IRS. My name is Daniel Kotz. I'm a licensed tax attorney. I help taxpayers in all 50 states get the IRS off their backs and out of their lives. I make videos like this to inform the public what to do with tax headaches and how to cure your tax ailments. So if you're being pursued by the IRS for anything, visit my website, set up a time to meet with me, give me a call. We'll discuss your case and figure out what the next steps are. So unfortunately, a lot of people are unaware of what their responsibilities are when it comes to taxes and when it comes to reporting their income, or they overdo deductions. Sometimes they simply put their head in the sand and hope the problem will go away. The IRS never goes away. Look, when you receive a letter from the IRS, any letter is a big deal. Some are a bigger deal than others. The CP2000 is a pretty big deal. They're saying they're going to assess additional taxes in 30 days unless you respond and let them know something is amiss. So the IRS tax code states in section 61, all income, you're to report all income from any source received. Everything. So sale of a home, that's income. There are deductions you might be able to take against it. You need to report it. If you've received one of these letters, here's what to do next. First, you're going to review your tax return, your filed tax return. Determine if you can tell if what they're claiming is correct. The IRS sometimes gets their computations wrong. Generally they don't, but it happens from time to time. Next, you need to decide if you want to try to handle this yourself. Now the IRS says that they have open phone lines, but good luck getting through.
We're sorry. All of our representatives are still assisting other customers. Please remain on the line as we value your call.
Or you can seek help from a qualified tax professional, someone that can help you make sense of the letter you received, explain to you what's going on. And very likely you're going to have that qualified tax professional help you resolve the issue at hand. They speak the language of the IRS. We do. We speak the language. We know what to say, and most importantly, we know what not to say. If you have questions, check out my law firm in the description or check out the rest of my content. Contact Cots Law today. Let's start building your defense against the IRS.